Good morning and happy Friday. And if I don't see you sooner, Merry Christmas. We had a great week for mortgage rates this week. And we had some economic news come in. One of the economic news that we were kind of concerned about was the personal consumption expenditure, the PCE. It actually came in showing low inflation. And then we had the Federal Reserve come out on Wednesday and they raised the rates by a quarter point. As I indicated last week, we kind of wanted them to raise rates because that brings inflation into check, and it also improved our rate. So let's take a quick peek at the chart. This week, here's the Federal Reserve right here that indicated that they are going to raise rates. Obviously, the stock market sold off. The stock market continues to sell off through today. And rates jumped up. This was that 4.625 mark that we were looking at. This is the 4.75%. Rates actually initially ticked down below that. They sold off, and then towards the end of the day, as the Fed came up with their statements, it closed above that 4.625. Yesterday, with the information regarding the government shutdown, which I'll go over in another segment, we saw rates actually worsen, but it hit that 200-day moving average and bounced off of it and closed. And then today we're above that 200-day moving average. So we've got 4 days above that 200-day moving average, which is pretty much locked us in now. So this becomes a floor, and this Fibonacci level becomes a ceiling. This Fibonacci isn't quite 4.5, but it's pretty dang close. So we are still in a floating mode at this point in time. We're seeing rates improve very, very nicely all the way back from November 7th. And as long as the government can't pull their heads out and give us a budget, and the Fed keeps saying they're going to increase rates, there's nothing in the tea leaves that is showing interest rates are going to worsen anytime soon. Pretty cool for those buyers that were either sitting on the fence post or were waiting and felt that they missed the boat. So rates are actually improving quite nicely. Yesterday, I locked a VA loan at a stupid low rate also. So let's keep floating those rates, and let's keep talking to our clients that, hey, rates have improved quite a bit. Home prices are starting to go down a little bit. It is starting to become a real nice buyer's market. Well, as the news is going forward at 12:09, the government is still on track to do a shutdown. And so let's see how this is going to affect mortgages. If we shut down over the weekend and through Monday, it's not really going to affect mortgages too much. As we start going into Wednesday, Thursday, and Friday, we're going to start seeing a little bit more impact. So let's go over some of those impacts. For conventional loans, the biggest thing is the IRS form 4506T. This is a form we have the borrower sign. We send it to the IRS to verify that borrowers have not forged their tax returns. So this could get delayed. Some lenders may waive this condition. Some lenders are not going to waive this condition, especially for self-employed people. If you are using self-employment income, they are probably not going to waive that condition. On FHA loans are typically not affected too much unless somebody shows up on what we call the CAVERS or the blacklist, or if we have a problem with an FHA case number. So let's say we need to transfer an FHA case number from another client or from one lender to another lender. That could cause a little bit of chaos. Rural development loans, they're shut down. They are pretty much shut down. You're not going to get a rural development loan through unless the conditional commitment has already been issued. And what happens is once an underwriter has completed a file, it has to be sent to RD, and the rural development underwriter needs to review the file. So unless that conditional commitment's been issued by a rural development underwriter, you're not going anywhere. On VA loans aren't too affected too much unless their website goes down. The last time the government shut down, the VA website crashed and there was nobody there to repair it. We have to order case numbers and appraisals and get data from the VA website, and if that website is down, there's nothing we can do. So overall, It's not going to be an initial effect for probably the first 2, 3, maybe 4 days. But if it starts rolling past that, websites start crashing. We need to get other data or documentation. Somebody needs to get their IRS transcripts down at the IRS on Fort Street. Then it's going to cause some chaos in our lending world. The anticipation is everybody's going to suck it up and sit on their laurels through the holiday weekend, and then come Wednesday, something is going to happen in the government, and somebody's going to have to give in. So we are going to have to see what happens today. If nothing happens today, we do not think Congress is going to stay around through Christmas to fix this, which they should. But we'll get into those politics on another time. So at this point in time, hang tight, and we'll see. And here's my marketing idea for this week. Apartment complexes. Everybody tries to solicit apartment complexes, but what they don't do is they don't consistently do it. Apartment complexes are great because the address never changes, but the person in that apartment always changes. So once you have the address for the apartment complex, you've got it locked and loaded. So how do you get an address for an apartment complex? Well, the easiest way is actually to contact the title company. They have access to emailing or mailing lists, and there's also some paid services that you can get mailing lists for. But what you really need to do is you really need to access them at least minimum 3 times and send them 3 separate mailings. You know, the first one most people ignore. The second one people start paying attention. By the third one you should have engagement. So why do we need to solicit the apartment complexes? If you remember a few weeks ago, I set out this real estate report card, and this is for Ada County, and it indicated 422,000 people in Ada County, 129,000 renters, and statistically 32,000 of those renters are able to purchase a home, and they just may not know it. They may think that they have too low of FICO scores. Well, FHA goes down to 500. They may indicate that they don't have down payment. Well, we actually have 100% financing, both VA and rural development, and Idaho Housing has down payment assistance. So it's real important to solicit these people. You also don't want to go door to door. There's a couple reasons for that. First and foremost, you need a peddler's license to go door to door, or a solicitor's license. In both Ada and Canyon County, the cities require a peddler's or a solicitor's license. Second of all, you're actually on private property, and you can be ticketed for trespassing because the management companies of those rental places probably don't want you taking their clients. In a video I did a few weeks ago, and it was a little long so I can shorten it down, I did a great scenario of buy versus rent and why it's mathematically and statistically better to buy than it is to rent. So if you want me to do one of those videos for you, or I can do the forms for you, just give me the heads up and I'll be glad to make those for you. So hopefully soliciting rentals and apartments can be one of your marketing strategies for 2019.